Good morning, traders. Apologies for the delay. We're starting 5 minutes late. It's 8:05 a.m. Chicago time on Friday. Happy Friday, the 16th of September, 2016. It is Quad Witching Friday, which means we're likely going to continue to see heavier volume, but the trade is expected to be choppy as positions are hedged. And so on. A lot of the options have expired, will expire in 25 minutes. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Um, Not going to cover the news anymore. If there's an item that is driving the session, fine, but otherwise, I suggest you find sources online to follow the news. I think that's not very good use of our time. The key item for today that's still in play is the Fed rate hike odds have slid to 18% for the month of September and 49.7% before the end of the year. The 10-year Bund is back below zero. The Bund had a very strong bid and pushed down 5 basis points to negative 2.1 bips. And then the Russians cut central bank rates this morning by 50 basis points, and that's really it in the big picture news. Whoa, as far as what's come out this morning, of course, we got CPI 0.2 versus 0.1, ex-food and energy at 0.3 versus 0.2. What's expected for today? What's left? We have the University of Michigan confidence survey, prelim at 9 Central, 10 Eastern, expecting 90.6. This could be a mover. It has been a mover in the past, 90.6. And then other than that, we have Baker Hughes at noon Central, 1 Eastern, and the net tick flows at 3 Central, 4 Eastern, right at the stock market close, and net long-term tick flows at the same time. Of course, you have expiration of all index products, including Eurex and the Eurex products, as well as the FTSE, the CAC, and the U.S. indices all expire today. And that's really about it. Now let's take a look at what was expected yesterday versus what we got. Um, I'll start by saying that completely off the mark yesterday. The expectation was for, well, this is supposed to be 9:14. Not sure why I have. Let's see. There it is. The expectation yesterday, again, as I said, way off the mark on the primary hypothesis. The setup here that was driving my primary hypothesis is the flat, oops, the flat bottom, here, and all of a sudden the compression down below, and I was looking for this to test, compress, and break lower. It did not. Instead, it compressed and broke higher. So overall, Hypo 1 yesterday didn't work out at all. I personally would have preferred the break lower, but the market had strength in it. Again, not sure why it switched to the 14th. Let's get that tuned up again. Here we go. And then the secondary hypothesis was to look for a rotation up. Remember, we have been in balance for about 4 days. We had a big drop on Friday, big rally on Monday. We sat inside on Tuesday, and then Wednesday we one ticked the bottom of Tuesday, which further fed into the idea that we would move the point of control down. Here's the point of control moving down here, and then even lower in balance. The expectation is it would continue moving down. So at a minimum on yesterday's session, I was looking for a test lower before the market came back into the point of control and started working its way up. The key target above is the CLVN right here, the MCLVN. However, the range was a lot farther for that than I expected. I did not plan for this. Overall, yesterday was definitely not a great trading day for me of any sort, or even average. So that's what we got yesterday. Here's That's what we expected yesterday. Here's what we got. Let me switch to a 4-tick Renko to fit everything on the screen. So there it is. We opened right at 2016.50. We had a clear open auction on the open. You can see it zigzagging across. This is what's called an open auction. In this kind of environment, we have short-term traders are likely in control. Long-term traders do not trade small swings and operate on a higher time frame. So this chop back and forth is short-term traders. Then we see the first break higher and away from the point of control, from the opening swing off this mid late. Because it's an open auction, I don't like that. I don't consider that mid trade a valid setup. This one right here, and then it takes off and it continues and it turns into a trend day profile and a trend day pattern. It did hit the composite low volume node right here. That was the key target above, and then it went sideways with the high being fairly weak, point of control being close to the high at 2140.50. So the expectation in this kind of the normal expectation in this kind of environment is to reopen, to test lower, and then to breach that high, the prior day's high, before it starts to move back on a trend day and consolidate to find buyers. Remember, trend days essentially mean that the market is not able to find the other side and therefore is looking for value, continues unidirectionally to look for value, and that's what we had. But in general, the next day it rotates back, looking for buyers or looking for more energy. And what it did is it pulled back overnight. On the reopen, it immediately dropped, went sideways for quite some time. You could see the Asian session didn't do much at all. And then Europe opened, and we have a bit of a sell-off with a profile that shows multiple distributions. So there's really not that much consensus there. Again, it's quad witching Friday. It's also expiration in Europe during that session as well. So that tends to kick in. The volume says that as well. 321,000 versus 210 common. And a lot of that is people being forced to move from the September to the December contracts. We can't read into that too much. This is almost like a reverse pan formation or something, like a cup and handle type of thing. Not sure what to make of this. It had an impulsive move down and then it just moved back up. Pretty erratic trading overnight, it seems, at least based on that chart. What the expectations are for today, given where we are, let's see where we are in the week again to build an assessment. So what we've done is week on week, we've put in lower lows. So we're one time framing down. We've got lower highs. We still have this big gap above that we left behind last week, and what the market has done is it's traded the heck out of this area down here, and yesterday it moved up and closed up in here. So the overall pattern for today is that there's a fair amount of support below in the bigger picture. The expectation for today is really difficult because of quad witching. There's a lot of delta hedging and so on that goes on into today's session. So it's again, as I said, it's likely to be erratic. I expect the LVN here to be tested. My primary expectation today is to, again, because we're opening inside of the prior day's range, there really is no value to yesterday's range because the market did not build any sort of balance. So the expectation is for a wide rotations on the open as we saw yesterday. I'm looking for an attempt lower, but overall I expect the market to push back higher towards that 2140.50 and back into the CLVN at a minimum. That's only 10 points of range. Yesterday we had 30 points. Uh, as an aside, look at how these ranges have exploded, which is great. So after these uh, terrible days where the market's going lower and lower in volume and in range, but look at this range, very low, staying at the point of control, which is 13 points per day, and all of a sudden we have these days that are absolutely exploding through the first standard deviation of range. Which is pushing us above 23 points. The prior yesterday was 30 points. The prior day was 22 and a half. The day after before that was 26.75, and then we have 45 and a half on Monday, and then on Friday 42 and a half points, and that's for the pit session only. Um, and it's a fair amount of trading, a fair amount of volume. Now, the one of the elements that we have to contend with here is the fact that we are in somewhat of a balance, and we need to extend this profile forward and see how it has filled in. And you can see the profile is filling in value and has moved out and is building this new high volume node right here. But still, the key low volume node still remains in the 43-45 area. And so again, this morning, expecting an open auction, an attempt towards that 29-30 area, but I'm looking for it to push through, pull back, and then continue higher. That's what I'm looking for as a primary hypothesis because I'm moving with the range. The caveat of this, the issue with this hypothesis is here's a day where it's sold off and then it buys up. Then the next day it sells off. Then it buys up early, sells off late. Then here's a day that's buying up. And yesterday was a buy up day. So the second hypothesis is to open, attempt higher, and if it breaks below and is unable to push higher anymore, then it gives, hypo 2 gives a much cleaner and clearer trade down to 21.18 and a quarter after a retest of 21.40 or failure to retest 21.40. The break is expected to be down, and I'm looking for it to stay in range on this special day. So that's how things are shaping up. Hopefully you can make something of that. Just for those who attended yesterday's AMA, thanks for registering and for attending. That video will be out later this morning. There was no chance to render it yesterday and post it, but it'll be posted this morning, and you'll have access to it if you did not attend. Another announcement: I have not spoken with my support person here, but these public AMAs will be cut down to less than one per month, just to reduce the amount of conversation and so on, and let you explore on your own what you need to with the markets. So this was the last public AMA for a while. We covered a few decent questions and hopefully help some people out. Have a great Friday. Remember, manage your risk today. It's really important not to get sucked into the action. Manage your risk today. It's not nice going into the weekend with a hole in your pocket, as I always say. Do not get drawn in. Just find the spots that give you the highest probabilities and then step on it and let the market give you what it may. You cannot control the outcome, but you can control how you get in and out of the market. Good luck.